Hey all, Friday 16th of December, thanks for joining me. About time I talked about the stock markets. You know, if you follow my videos over the recent weeks, you'll know that I've been talking about this, a counter trend move. We're in a longer term bear trend. So this one I did not see as the start of a new bull run. This was just a bounce in a bear trend. Now, admittedly, this area here is where I thought the rally would end and the bear trend would resume, and I was getting close to that. But we had this very surprising move on Tuesday. That was a CPI number that came out 0.1 or 0.2, the smallest of margins below expectations, dropping from 7.7% to 7.1%. The market went absolutely berserk for a couple of hours, where I just don't know where these people get the ideas from, but suddenly this was it. The Fed were going to pivot. Everything was saying it was time to buy the market, but of course it didn't last long. And sellers came in, pushed the market back down, and reality hit. So this was Tuesday, long upper wick, small green body. Wednesday was when the Fed hiked rates, as expected, 0.5%. Now, I was watching Powell talking, and his message has been consistent since they started hiking rates. Rates need to go up, they need to go higher, they need to stay there for longer. There is no prospect of a rate cut. And his message has been clear, but for some reason the market and investors have just seen other reasons why they need to be long, and they believe that the bull market has restarted. I'm listening to him. Don't fight the Fed. Powell is very clear. I was surprised he didn't go lower on Wednesday when Powell was talking after the FOMC meeting. We got a delayed reaction on Thursday, and of course Friday we're following through to the downside. Now, this rising wedge is a bearish pattern. We broke it. We then raced up to test the upper trend line just below the 500-day moving average for the S&P, and then broke back down below the 200. Now we're below the 100. We've broken the early December lows, and to me, I think the market is just going to go into free fall. If you've seen my previous videos, you'll know that there are similar patterns to what happened in 2007 as the global financial crisis evolved, and in 2000 when the dot-com bubble burst. We've got very similar patterns. This is just a classic bounce in a bear trend designed to suck in all the mugs who think that the bull trend has restarted and that they're going to be saved by the Fed, and then they get crushed as the market from here drops around 50%. That is what I think is going to happen. A lot of people contacted me recently. How quickly is this going to happen? When's the deadline? Can we really go down in December? What about the Santa rally? There's nothing telling me here that we're getting a Santa rally. This is all telling me that we're going down. That's all I can tell you. I don't know the speed at which it will happen. I'm not saying that we're going to crash by Christmas. I'm not saying we're going to crash by New Year. I think that it could be a relatively orderly move to the downside. It could be the usual go down, consolidation, maybe a bear flag, next leg lower. I'm not saying that we're going to race down 50% over the next few days or even over the next 2 or 3 weeks. It could take months, but we are in a bear trend. Nasdaq, weaker, has been weaker all year. Technology was the biggest bubble on the planet. So it's not really surprising to see that bounce in the bear trend. The short-term recovery didn't go very far, didn't go as far as the S&P. We didn't even get to this trend line or the 200-day moving average. But we have broken this lower trend line now. This was really just a very small bear flag on the grand scale of things. Broken lower, to me, that's the sell signal for the Nasdaq, and that means we're about to embark on the next leg lower. So we're going to be seeing something like this, or we're going to be seeing something like this, or we're going to be seeing something like this ahead of us in the days and weeks and months ahead of us. Completely for me was the Dow Jones, massive rally. We got all the way up to the 78.6% fib, so we recovered nearly 80% of the losses for 2022. Incredible. But again, I think the Dow Jones is on its way down. You can have a quick look at the DAX. If you're a subscriber, you'll know that I've had us selling at the 500, 14,600 area for weeks, and I've been waiting patiently for the market to decline. Again, we had to have this huge bull trap before the market turned lower, bull trap on the CPI and the FOMC event this week. Now, we've clearly broken lower, and again, I think the DAX should start to head down. Even the Bundesbank has admitted today that the German economy will enter a recession and that inflation will continue to go higher into next year. It's not an ideal situation. Basically, the Bundesbank has stated that officially the German economy will experience stagflation. Quickly to the weekly chart. If you want to see the sell signal on the weekly chart, here it is. New high this week, breaking the previous high, sucking in those bulls and investors who think that this is the beginning of a new leg higher because CPI was 0.2% less than expected. But of course, the bears took over soon enough. We are in a bear trend. Now, red body, long upper wick, the higher than the previous peak. And of course, a big bull trap. 5 weeks of buyers. All the investors and buyers that jumped into the market over this 5-week period in the DAX are now underwater, and significantly underwater, because this low is 14,142. So we're over 100 points now lower than the low of the last 4 weeks. Situation in the S&P, the spike up, sucked in all the buyers and has now crucified them, really. Anyone who's bought or invested and is still long in the past month is now going to be looking at a losing position by the close today, assuming we don't get back above 39.10 in the S&P, which means we'd have to rally at least another 50 points from where we are right now. This is the debt contract I'm looking at. I know it expires today, but this has all the data. If I show you a March contract, I'll only be able to show you a few weeks worth of data. Mighty Dow Jones, which was so strong. This weekly chart, again, another big bull trap, long upper wick, new high for the week, plunging below the low of the last 4 weeks. Red body on the lower end of the wick, doesn't look good. Back below the 100-week moving average. For me, that says it all. We are going down. We're going down significantly, and we could be going down quite fast. I'm going to give you some targets. I'm going to do a new video tomorrow, so please like, share, subscribe. Make sure you've got the notification bell. You've clicked on it, because I'll release a video tomorrow when I give you some targets, and I'm going to try and work out what I think is my best guess for timescale for this move to the downside. I'm also going to talk about gold tomorrow, which has been consolidating in what I believe is the beginning of a bull trend. I think that we've hit a good support level now, so I'm looking for this to recover, but I'm going to talk about that in more detail tomorrow. So if you're interested in understanding where I think gold is going over the next few days and weeks, make sure that you have hit that notification bell and you'll know as soon as I release that video. One thing to add, if you didn't watch the video that I recorded a couple of weeks ago explaining my exact reasons why I think we're in a bear trend, exact reasons why I think this is a bounce in a bear trend, and where I think we're going to go next, and why we are repeating 2007 and 2000, and why we're going to have a 50% crash from where we are now, I'm going to put the link in the box below, and you can watch that video and you'll understand exactly what I'm talking about.